What's up YouTube? Welcome back to the Wallet Monkey channel, where we give you all the credit intel you need to grow your wallet. Today what I wanted to share with you is this monstrosity of a post which hopefully will serve you. This is a credit score requirement cheat sheet. Now I know we're going to be able to simplify this down more than we have it now, but understand right now it's kind of a little bit thick, and just because there's supporting data and because it's not as simple as just being like, hey, if you've got a 550 you can get this, if you got this you can get this, right? Sometimes it's a little bit more nuanced than that. You know, I really want to get beyond that, like, oh, you need a 661 to get this credit card, or the thought that that's what you can get with that credit score, right? Because we see a data point, it's like, okay, they had a 660, they had this, oh, I got the same, so I should be able to get it. There's just way too many other factors involved in the profile that people don't realize. Like, let me give you a great example. We could have the same credit score, right? Same history, same total amount of credit limit, and same amount of debt utilization, all that could be the same, but you've got a mortgage and I don't, you'll get approved, I won't. On a lot of cards, on a lot of credit cards and a lot of other things as well, right? So anyways, let's dive in, shall we? Currently, 67% of Americans have a good FICO score, that's a 670 or higher, and 62.5% of Americans have a good Vantage score. That's pretty cool, right? The average FICO score in the US is 716. I believe the highest scores are in San Francisco, and it's a 746, followed by Minnesota, which is a 743 or 742. Anyways, pretty cool. Minnesota, out of all places, has the highest average FICO score outside of San Francisco. Pretty wild, right? And the average Vantage score is 695. Both are considered good on a tier scale, let's call it. Okay, next is, in case you didn't know, this is like the categorization that they use. What we talk about when we talk about prime, subprime, deep subprime is another one, and then super prime. So here is the breakdown. Super is 781 to 850. Then we got prime, which is what most people fall into, 661 to 780. Non-prime is 601 to 660. Subprime, 501 to 600. And deep subprime is 300 to 500. Let's dive into it. Mortgages. If you've got a really bad score, then you want to get an FHA. That starts at 500 credit scores, okay? And FHA is actually a really great program. There's several others. There's some military specific programs. That's what you want to get into if you've got a really low score, or just getting into it, or trying to repair your credit, whatever you got going on. But understand that mortgages typically start at about a 620. Here's what you could expect. These rates always change, but again, here we are. So 620 to 639, you're at about 4.7% APR, which understand that the reason why APRs usually on a 15 and 30 year are so low is because it's an amortized schedule. So the amount that you actually pay back, surprise, is not anywhere near this. It can be in the hundreds of percent. You need to look into amortization schedule and figure that out for yourself. And then at the other end of the scale, which is a 760 to 850, your super prime, we've got a 3.1%. So this is the difference between a $1,296 payment on a 30-year fixed and a $1,570 payment. Right? Make sense? Auto loans. A little bit, we're starting to get into a little trickier territory. 66% of people approved for a car loan, whether it was new or used, had a 661 or higher. So that's not a direct answer, is it? No. But just understand that this is based off the most recent data. This whole guide here is just a data dump of everything I could find from the last 2 years, right? Because COVID really did, mix everything up because, savings rates went through the roof, credit limit increases went down, borrowing went down, all of that went down, but then it kind of rebounded. So now we're looking at really 2 periods in time, before that and then after that, right? And so the data is naturally going to be pretty skewed through this entire period. But for the most part, this hasn't changed much over time, okay? So prime is over 66% of total financing, while subprime falls to just over 15%. That's good. Prime plus is nearly 64% of total loans, while subprime dropped below 17%. And deep subprime hits record low. We want people out of subprime, especially out of deep subprime, okay? We want them out of there. Let's pull them out, let's help them, let's educate them, right? 34% of people had a 501 to 660, and less than 2% had a score below 500. Again, it's like, I can't give you an exact answer, but I can tell you what's down the middle. 66% of people had a 661 or higher. There you go. So that's the most concrete answer you can get out of that. You can look deeper into the data here. Experian put out a whole automotive finance market report in Q3 of 2021. That's the most recent data from what I could find, outside of like crazy weird subprime stuff. But so we can look at this again, this data extrapolated a different way is, first off, is that non-prime borrowers credit scores 300 to 660 for a new or used car is at 12.46% on average, the APR. Whereas if you had a 661 to 850, it's just 3.82%. So that is a difference of over 3 times the amount of APR stretched out over however amount of months that you've got the car loan, right? We start to get ourselves into trouble. Okay, so this table breaks it down again. Deep subprime, we've got loan amount, monthly payment, new car APR, and then used car APR. Notice how used car is more than new car, all the way down to like, here's super prime, 781 to 850. We've got a much smaller gap, but we've got a huge gap for deep subprime people, 300 to 500 credit scores, 12.99 for a new car, up, and the difference is 19.85 on a used car. It could be much worse than that, you know that. It just depends on what you get approved for, etc. So the common theme you're gonna see here is that subprime, deep subprime, they pay more. They tend to default more. Banks usually want to get more assurances. Banks usually want to charge more APR because it's higher risk. So everything bad possible tends to hit those in subprime and deep subprime. Coincidentally, that's where we see the highest amount of utilization, the highest amount of delinquency, the highest amount of everything bad possible, fill in the blank, right? Credit cards, again, is another one of those things where it's like, I can't give you a specific score, but I can just tell you like what the patterns are based on the highest, super prime, and the lowest, and then the overall. For example, overall APR in 2020, we're now below 20%, 19.2. So that's down over the last really couple of years. We're now just in alignment with, getting back to 2017 numbers, which I guess you could say 2017, 2018 were good times now, right? Super prime, on the other hand, is at 17.5% average, and deep subprime is at 23, which I don't know. I think some of this data, I wouldn't say it's wrong, but I don't think they're really pulling from the depth of the crap in deep subprime, because like even CapitalOne can charge you 29%, 26, 29. The Apple card by Goldman Sachs, I know a lot of people got a 24, 26% APR. CreditOne, which is a subprime, I don't even know what you would call them, horrible card, is I think they're 29%. We've got articles on the site about this. Best credit cards for bad credit, this article here, and at the bottom I go over like the subprime stuff, but I think it does get much worse. Maybe I'll add that into this article here. Okay, yes, it looks like rates are going down. Here is some APRs up to 2021 for store credit cards. So you see that we are matching. That's interesting. Well, we're down, but pretty close to the same that we saw in 2018 for all new credit cards. Average APR for new credit. Oh yeah, so that's new credit cards, and then this is for store credit cards. Yeah, I mean, we haven't really moved that much. From 2019, we moved down. One could just argue that this is like the fallout from 2020 though. Store credit cards are gonna be higher APRs naturally, which again, it kind of like builds the case, like why would you even bother getting them? Average credit line on new accounts. So just to give you this like as a reference point, and this is not the exact number, it's like 7,842, and then this is just under 4,000, this is just under 2,000, this is I think 500 or 600, and this is maybe 200 to 300. It's a bar graph, so I have to extrapolate that data as best as I possibly can. CLIs in 2020 was 1,500 compared to 2,000 in 2019. The biggest category that was hit was actually prime category. In 2020, the median dropped from $1,550 to $1,000, which that's kind of picked back up again. Just depends on the lender as well. Application volume and approvals. So again, taking this like much further, just to give you all the data so that you can really see, I guess, set the best possible expectations for yourself. Because if you're in the subprime or near prime, you kind of know what you're up against, right? So these people, look, subprime and deep subprime are applying the most for credit cards, and they're getting approved the least. So even just knowing that, I know what my odds are, like probably just stop applying until we can get that score under control. But then you start to see approval rates. Okay, well, who's got the best? Super prime and prime. Okay, so then if we want the best odds of getting approved, besides all the other factors we're doing, well, that's an obvious one, isn't it? And then in terms of expectations with fees, well, super prime pays the lowest amount, and deep subprime pays the most. Understand that this is mostly like late fees though, annual fees and things like that. Super prime people pay the most because they get the best cards, which have the highest yearly fees. So these fees are everything. This is late fees, this is annual fees, this is others, this is everything that you can imagine, right? And then lastly, let's cover personal loans here and then wrap up. So I kind of borrowed this off of another page that we've got, which is a personal loans page, which gives you pre-qualification on personal loans, gives you a lot more data. That link is right here. But yeah, this just gives you a good range so that you can set proper expectations. It looks like the lowest that we get is this Avant, which is about 550. I think you could probably get down to 500 into some really weird stuff like a secured loan, putting up your car or putting up, something else. I think you could probably be deep subprime and still get something to go through. But at that level, we're talking like payday loans, we're talking like $1,000, $2,000 loans. And some of these, like I was even just looking at a site the other day, has upwards of 200% APR, like effective, like real APR is actually in 100%. And so that's just something that you're never gonna be able to repay. I don't feel like how would you ever repay that? Or why would you want to is a better question. So maybe we look at alternate ways of like, getting funding or fundraising on that front, right? So at this level, it really starts to get sketchy. Like if you thought credit cards were bad, right? With predatory annual fees of $100, they're giving you like $200, $500 limits. Well, it gets even worse with loans because now you're putting up something as collateral for deep subprime. And on top of that, they can keep it if you can't pay. And the APR, the effective APR that we're looking at could be in the hundreds of percent. Now, clearly that's not these guys. That's not anyone on this list. But yeah, we got Avant and then all the way to, we got Lending Club starts at 600, Upstart starts at 600. I know these two are like really lenient, Lending Club and Upstart, really, really lenient. I mean, I would even say like a 620. That's crazy that they'll go that low. One Main Financial offers secured and unsecured. You see this is secured here. They'll start at 620 and then Upgrade is unsecured and pretty smooth, pretty fast process. I know people that have gone through that. So there you have it, my friends. I hope this helps you. Let me know, did I miss anything? We got everything, mortgages, auto loans, credit cards, personal loans. I thought we got everything, but did we miss anything? I'd love to hear your input. And of course, go check out this link, bookmark it, share it, help us, get this site in front of more people. And of course, do the same with the video. Comment below, like and do all the fun stuff that the algorithms love so that more people can check out this video. Thank you so much for tuning in. If you're brand new here and you like this sort of thing, stick around, hit the subscribe button, the bell notification, turn it to all. Be on the lookout, more videos coming soon. See ya.